Okay, so this is the second part to the DTCC $1 trillion blockchain two-part video series. You got to forgive the audio qualities in the first cut. I forgot to press a button that I usually press. You do these things 100 times, 100 times, 100 times. You're going to make a mistake. However, the important part is that you guys understood the weight of what I was trying to get to you. The DTCC moves around so much money, guys. So the fact that they're getting ready to build a blockchain, build a distributed ledger technology, and the fact that they are working with Ethereum, they are working with R3, they are working with Hyperledger. Now, those who know who's associated with R3 and Hyperledger. That is why the thumbnail was designed the way it's designed. Now, I'll admit I missed a couple assets. Hedera Hash Graph, we already know who they're tied in with, as well as the Web 7, the World Economic Forum's selections that they put in that brochure from a couple months ago. But what you're going to see in the rest of this video, guys, is a 20-minute interview that I've chopped down to its most crucial parts, where they're going to break down to you the process. Initially, this was called Project Whitney. Now it's going to be referred to as Project Ion. But in these clips, they are going to detail what Project Ion is going to do to the space. Now, these clips come from 2020, posted right around the same time that everything started to change. And they're going to talk about specific terms, blockchains, distributed ledger technologies, NFTs, but listen to how they categorize it. They refer to it as tokenization. So, you already know what to do, guys. If you found the value, hit the like, subscribe, and as always, have a great day, have a prosperous day. Most importantly, make that money and enjoy the rest of the video.
Panelists, I'm honored to be joined today by Jay Biancamano, who is U.S. Head of Digital Products at State Street. Hi, Jay.
Hey.
And we're also here with Jennifer Peavy, who is Global Head of Business Innovation at DTCC. DTCC has been exploring the benefits of asset tokenization. And one area of focus is really centered around natively issued digital securities. So the team is looking to understand the benefits of a digital infrastructure in the private market. And this effort, as you heard earlier, is known as Project Whitney, which was outlined in a case study that DTCC recently published. So I'd like to use our time today and kick it off by asking Jennifer, could you walk us through what is Project Whitney and tell us about some of its core components?
Absolutely. So Whitney actually set out to explore the value proposition of an off-chain digital platform for issuers and investors who wanted to benefit from an open and public blockchain protocol within the private market space. Now, Whitney itself, actually, we focused the efforts around the digital securities that were Reg D exempt securities. And what we found is when we started looking at natively issued tokenization and securities, we found that there was activity happening in the private market space. So we went back to the drawing board and said, well, what's happening in private markets that needs a different solution, or why do they want to rework how they do things today? And we found that there were a number of different challenges there. And then we started to look at some of the smaller firms that had started to release some SaaS platforms around providing some solutions that were tokenizing assets. And we started to look at that space and understand what the challenges that they were facing were. And we brought those things together to build out and design this digital platform. And ultimately, our goal was not, we made a very conscious decision to not be everything to everyone. Our intention here was to design a platform that would bring an ecosystem together. And therefore, we chose some non-differentiating capabilities that would actually support this platform. So things like compliance and suitability enforcement, having an authoritative stock record, building out APIs so that you could service both tokenized securities as well as assets that exist traditionally as electronic copies of underlying data. And then also bringing in those issuer and investor registries. And I think as Rob mentioned in our earlier discussion, Our initial build out of Whitney was to integrate to the public Ethereum blockchain. Since then, we've also built out connectivity to Hyperledger as a private blockchain, as well as Porta. So a lot of really great and interesting.
All right, thank you, Jennifer. That's really interesting. Let's turn now to why a solution like this might be needed. So Jay, I'd ask you, in your opinion, what are the biggest blockers or challenges in the private markets today?
Well, Teresa, we looked at the private markets, and they're very disparate, and it's a very manually intense process to enter the private markets and be part of it and find liquidity. So there are a number of pain points I think the market is used to that can be addressed by implementing new technologies. Issuance and liquidity obviously are two areas. Valuation, clearly in a private market, is very difficult. I like to make the joke: the buyer always has one valuation, the seller has another valuation. There's an intense lack of data, and the problem with the lack of data is it interferes with the ability to find valuation, right? So I think if you're looking at the private markets and what pain points to address, I think initially you have to really think about what data is available. The data is very disparate. There's a lack of standards. There's also a lack of trust. There's really no repository for this data. If you look at the public markets, it's very easy to find data to fuel ideation. In the private markets, ideation is very different, very difficult. It's a very one-on-one type of process to sell these ideas to portfolio managers, and that's why you see, a lot of these instruments being very illiquid. Now, at the same time, you have a little bit of a contradiction that the private markets are growing much faster than the public markets. But these markets are very decentralized. There's no standards between these markets. There's a lack of democratization of liquidity. So, we could go into a number of pain points, but really, if you think about private markets and access to it, there are still a number of barriers that the average investor can't access. And I think if you look into the future, the ability to find alpha in private markets is going to be a higher demand product than we see now in the public markets. So, we see tokenization entering right now in the real estate piece, in the IP piece, in the art and other real estate. So I think there's an excitement around democratizing private markets with tokenization. And when we heard about Private Whitney, we had already been investigating this market for well over a year in my group in digital products, and we see a convergence between what we're doing and what DTCC is doing. And I think it's going to ultimately benefit the end investor.
Leading State Street's innovation work around digital assets. And you started to touch on this a bit. You highlighted all these challenges. So could you give us your insight into how tokenization could address some of them? What are the benefits there?
Sure. So, we think tokenization is a democratizing product. I think it allows increased liquidity. When you can increase liquidity, you increase data. And when you increase data, you increase the ability for people to understand and enter markets and find value. It's smart contracts built into tokenized assets will allow for a lot of the compliance issues, the drag on a lot of these, entry and exit points to not go away, but to be seamless and, virtually immediate. Automation of, manual administrative tasks, I think, will be the most welcome part of this via smart contracts. But, there's also going to be, lower errors, right? You have immediacy, you have the consensus of the blockchain, and it'll be, increased speed. And when you can increase speed, when you can increase settlement, then it allows for, more ideation and more liquidity to enter the market. And, one of the other things I think is really exciting is fractionalization. If you think about private markets right now, there's a very small pool of investors that can access it, and some of the reasons is because the ability to enter the markets is very expensive. So fractionalization, I think, is going to be something that democratizes the market to the average investor, and also meets regulatory requirements to allow certain investors to enter these instruments that they currently cannot.
DTCC pursuing a solution for the private markets, and how does this support DTCC's overall strategy and where the industry may be headed?
Yeah. So, DTCC has a long history of providing resilient, secure, efficient post-trade infrastructure for the industry. And we believe the concepts that we've outlined in Whitney allow us to extend those strengths of ours to the private markets, right? We can help enable proactive automated compliance enforcement across multiple venues, creating some of that standardization that Jay just talked about for the issuer, the placement agent, trading venues, and any other stakeholder that wants to connect. By maintaining an authoritative stock record gives confidence in the fact that a golden record copy of your transaction data is stored in one central location, but can be permissioned across your appropriate counterparties. And then facilitating no-touch processing end-to-end. I mean, DTCC has been on a journey to help the industry get to this no-touch processing in multiple areas of our post-trade processing businesses. So I think this is just a natural extension of us being able to do that. And then taking a look at tokenization, going back to our earlier discussion, it's really just an imperative to continue to innovate and to understand what different technologies mean for us and what they can enable for us, and how they can change our ways of working and improve and make our jobs better, easier, simpler, et cetera. I think that's kind of what we're all striving for on a day-to-day basis. So really a lot of synergies between how we were looking at Project Whitney and what we do today.